It blows away the AMDs, the Microns, the Texans of the world. Intel has a number of irons in the fire. Their overall business is growing as overall computing power grows. And they're the second biggest chip company in the world with great margins that come from being such of a size. So I really like Intel here.
Well, Jim joins us now on the phone. Jimmy, you there?
Yeah, I'm here with you, Scott.
We're tweaking you a little bit. I feel sometimes we have to do that based on some of the calls that go awry, and this one is in danger of really doing that. What do you do today with your position in the stock as it craters?
Yeah, well, first up, I'll own up to deserving the tweak there. Some of what you just played is, absolutely true about sales growth and margins, but here's what's also true and new today is they're screwing up operationally, okay? And it's just as simple as that. Scott, you'll probably remember 2 years ago we were dealing with the operational issues on the 10-nanometer chips, and that was kind of painful to go through. Now we're going to go through the same thing on the 7-nanometer chips, and frankly, that outweighs anything that they're doing with sales and margins. So here's the takeaway from this. Investing is supposed to be fun, and it's not supposed to be as hard as this stock is making it. I could make a case, based on its performance over the 5 years I've owned it and sales and margins to hold it, but I'm not going to. I'm going to be selling into strength whenever that comes over the coming weeks. Now, this is not a day to sell it, okay? Not down 15%. That's an overreaction. But just going back to the overall thesis that it doesn't have to be this hard. There are so many semiconductor stocks out there that are doing well and not having these specific operational issues. I will be selling it in the mid-50s, which I expect it will be in the coming weeks.
Jim, if you're fishing for a long time and you keep catching a shoe instead of a fish, sometimes you just cut the line and you go to another pond. Stacey Rascon, who's the #1 chip analyst on Wall Street, earlier today on this network said, and I'm quoting, the stock is basically un-ownable. And this from the report after the call. Ordinarily, we frown on moving ratings directions on an earnings night, but this, our 45th Intel earnings call, was the worst we have seen in our career covering the company. What if this thing goes lower, Jim? I mean, you're at risk of trapping yourself here and having to sell it for an even lower price than it's trading today.
Listen, you're factually correct, Scott. That's always the risk. I look at it at about 10 times earnings. Not very much debt on the balance sheet. And again, I go back to the fact that they have been growing margins and have enviable margins. This is not worth down 15%. Was it worth down 5%? You bet. And that's really where the delta lies. So, look, I've got to be prudent in how I manage exiting this. This isn't a dump it on a down 15% stock. And I will take my chances that I get out of it in the mid-50s. But one thing is for sure, Scott. I'm tired of these conversations, and I don't want to have them anymore. So in the near future, we won't be having them.
Yeah.